All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, so we saw on Saturday a pretty aggressive pump on Bitcoin. We pumped up pretty much to the top of our channel, and we did reject. We took some internal liquidity. We didn't quite take both highs here. You can see we took this lower high right here, and then we had a high that was right next to it. It was more of a double top here. And then we started to kind of just fall down over Saturday and Sunday. But this entire move down that we saw did look corrective. And we did come down to the midline of the channel, and we saw a bounce from the midline of our channel. Now, after the drop that we saw last week, this drop here looked pretty corrective for the most part until the very end. And the very end of this drop happened based off of some news that happened over the weekend. The geopolitical news caused a little bit of a scare, which caused us to drop past our support level, that 786 in that golden pocket we were looking at. But we were able to make a higher low, and then we saw this aggressive push up on Saturday. I did talk about how the last couple of weekends, we have seen weekend highs. I talked about this in the Telegram. I updated you guys in the Telegram that we could put in another weekend high and see that weekend high be another high to be taken out. So we did put in that high on Saturday, and you can see all through Sunday, we continued to drop to the downside, putting in another weekend high. But when the markets opened this morning, after bouncing from our channel midline, we saw a pretty aggressive pump, and we finally broke out of the channel. So a couple things I posted about in the Telegram this morning. Let's watch for an SFP of the weekend high. If we don't get that, I'm really looking to come up to SFP last week's high into our 1-to-1 Fibonacci extinction target. And what we want to diagnose here is from the lows that we made last Saturday, last Friday, last Saturday. Actually, it was late Friday night, Saturday for some people in the world, but based off that geopolitical news that kind of was a catalyst for the drop, we are seeing what looks like a very corrective move to the upside. And in a corrective three-wave move to the upside, ABC correction, you want to see impulsive price action coming in your A wave. You want to see corrective price action coming in your B wave. And then you want to see impulsive price action coming in your C wave. And we did come up, I did post in the Telegram, if we do SFP the highs at 70K into our $70,300 1-to-1 Fibonacci extinction target, then this could be a three-wave corrective move before really starting to fall back down and potentially make even new lows below 60K. So that is something that I'm going to be watching for. But we have broken out of the channel. Finally, for the first time, you can see this descending channel that we've been in for about 3 weeks. We have finally saw a strong breakout from this channel with increased volume to the upside, and we came to take that liquidity from last Wednesday, excuse me. So we did get the confirmed swing failure pattern, and I did not enter on the confirmed swing failure pattern because I was waiting to see if we were going to come a little bit higher to hit that $70,300 area. As I posted in the Telegram, if we came up and we hit that area and then we fell below, I was ready to short. Now, I am still short on the move up today, but I shorted a little bit later on. Let me just go to the 15-minute chart here. And after seeing that initial drop from the swing failure pattern, we saw a rise up to our lower high golden pocket, where that is where I ended up taking the short today. So I am short on Bitcoin from around 69,525, around there for me. And my stop, of course, is above the high from today. And if I do get stopped out because we come up again to hit that 1-to-1 target, then I just will look to re-enter. What I will say here is, after our initial impulse that we saw up on Friday and Saturday, initial impulse to the upside here, we saw that corrective move down to the midline. And in this last push up, it does look like we could still get a 5-wave impulse to the upside from here. So you can see we got a potential push up in a wave 1, a wave 2. This could be your wave 3 followed by a 4, and then we could get one more high in here. There are a lot of problems with this, though, guys. There are a lot of problems with this push up from the Sunday lows, this kind of back test of the channel midline here. First off, looking at this move up, it does look more like a 3-wave corrective move rather than a 5-wave impulse. Because if this was going to be a wave 1 and this is a wave 2, wave 3, 4, 5, you want to start that wave 1 with impulsive price action. So if we zoom in here onto the, like, let's just go to the 12-minute chart here. From the lows here, you can see that it doesn't really look like a 5-wave move to the upside. It starts out with a 3-wave move. And then we kind of get this, flat correction in here. It's honestly a bit messy in here as far as the Elliott wave counts go. But I do think this push-up that we saw today was a strong push-up on a nice increase in volume, and we finally broke out of our descending channel that we have been in for a few weeks now. So that is a good sign, and look at the increase in volume that we saw on this push-up. Now, since then, we have been grinding sideways and down in what we could say is a descending channel, because anytime you reject from a lower high golden pocket, you can pull that trend from the highs of the day to the lower highs of that descending of that golden pocket down to the initial lows. And you can see we're just grinding nicely within this small, what looks like a corrective channel where we could break up to take out today's highs. So I am still looking at potentially making another high locally here, and even still coming up to take out 71K. But I want to see how we react once we get to our target between the 1-to-1 and the 1.236 Fibonacci extinction. And that 1.236 is pretty interesting because our 71K highs are going to be right above that 1.236. It's a little bit higher, but you get the idea. It's in the general area. If we zoom out to the hourly chart, we are seeing some bearish signs on the chart. So with the confirmed liquidity grab, yes, we're breaking out of the channel. And could we come down in this descending channel until we backtest this bigger descending channel and then see new highs? I will be looking for the backtest, the bullish backtest. If we do get some reaction here at the bullish backtest, I will look to take some profit on the short position and potentially enter a scalp long just to take out our highs from today. But we have significant bearish divergences on the chart right now. So if we look at the 1-hour chart between the Saturday highs and today's highs, you can see we do have confirmed bear divs on the chart on both NAMI and Market Cipher B. And NAMI's got multiple drives as well as the money flow bear divs. It's very slight, but we do have money flow bear divs on NAMI as well. If we go to our 2-hour chart, you can see that we also have the pretty extreme 2-hour bear divs coming in here, 2-hour bear divs coming in here, and the money flow bear divs on the 2-hour chart on NAMI as well. So with us coming up to our range highs, and let's actually, before I go on with the bearish divergences and confirmations, we can turn on our range that we've been in for the past 3.5, 4 weeks, and you can see here that our value area high is now shifted down to about where we rejected today. So we were not able to break out of the value area today, still trading pretty much this flat and sideways range, but we have broken out of this descending channel. So at least some sign of hope. We broke out of it on an increase in volume. And if we backtest it, I will simply backtest it and hold. I will simply be looking for higher. If we do fall back inside the channel now, I think we are going to make a significant drop to the downside, probably to take out this liquidity trail that is built up, the Tuesday lows from a couple weeks ago, and then the Friday lows from this last Friday. But for now, we do have bearish divergence on the chart, bearish confirmations coming up to grab that key liquidity from earlier in the week, from this Wednesday, last week's highs. And if we start to lose the POC, then we could expect a rotation down to the value area low if we fall back inside the channel. If we are able to maintain the bullish bounce of this channel, I will be looking for higher. Overall, I still think this entire range is a corrective range, a corrective complex range before coming down to take out our 60K lows. So I am still expecting new lows. But if you guys remember a few of the past live streams, we've talked about this fractal that has been in play, very, very similar. The market doesn't repeat itself, but it does rhyme. And we've been looking at a fractal of what happened from the 80K range to the 98K range, how we saw kind of this sideways chop for a bit, and then we got one last big push up to take out the range highs to come into our bigger resistance and reject. And if we take that fractal and we just shrink it to match this time frame, instead of a 3-month range, a 1-month range, you can see that we are still following this fractal pretty nicely here, and that we could be coming up to take out your 72K highs, pretty much the breakout, the liquidity trail that was built from this descending channel to take out all this liquidity up into our, to take out the channel highs, or even to come up to about 75K, where we know that 0.5 Fibonacci is located, before rolling over. So do I know what is going to happen? No, I don't. I do know that we just took some major liquidity from earlier in the week with significant bearish divergences on the 1-hour chart, on the 2-hour chart. If we go to the 4-hour chart, you can see that on the 4-hour chart, on Market Cipher, we do not have the bearish divergences, but we do have the bearish divergences on NAMI here with from here, higher highs in the price action, lower highs in the momentum waves there. And we even printed a hidden bear div on Saturday, but that hidden bear div just played out with that correction to the midline. So those have already played out. Money flow still does look pretty decent overall in this range. Money flow has been curving to the upside and getting better, getting closer into the green. But I'm worried about this really after taking liquidity, rolling over here pretty aggressively to come down and take out our 60K lows, to come down to our real support between $58,000 and $57,000. If we look at our liquidation heat map, and let's actually just go to the past month of price action, that's pretty much this entire range, the length of this entire range here. You can see that we do still have some significant liquidity that is still above us, and it is pretty much coming above those initial $72,200 highs, would grab both the pools of liquidity that are above us. So we have a pretty aggressive pool of liquidity right above the 71K highs, and then above the 72K highs, we have the rest of it. And those both are weekend highs that I've been warning you guys about in the live streams, how those weekend highs don't often stay intact longer than they usually get taken out sooner rather than later. And I would not be surprised if we keep rising here. The big test for me, guys, is if we do start to fall back inside of the channel after grabbing the liquidity, and with this looking like a 3-wave corrective move, I have to say that I'm going to be looking to at least come down to take out our $62,500 lows, but probably to come take out our $70,000 or $60,000 lows. The thing with this push up, since the Friday night, Saturday morning lows, since those lows happened late Friday night, early Saturday morning, depending on where you're at, if we were looking at impulsive price action to the upside, so let me just go into the 1-hour chart. Could we classify this push up here as impulsive? Yes, we could. It does look pretty impulsive. If you wanted to, you could zoom in on the lower time frames and try to count 5 waves within that. But I would say it was on an increase in volume. If we turn on our volume again here, it was on a nice little increase in volume here for the most part. And the pullback that we saw after that did look corrective. But the thing is, if we were looking at an impulsive wave here, we would really want to see, if this was a wave 1, this was a wave 2, we would really want to see this third wave extending and breaking up, not past your 1-to-1, past your 1.236. You'd want to see it breaking up to like around the 1.618 Fibonacci extinction. And with increased amount of volume and with continuation here. So could it still be a third wave? Yes, but it's looking less likely to me that it is a third wave, even within the bigger third wave. So let's say that this was a wave 1, this was a wave 2. You have your big third wave here. Within the third wave, you're still looking for a 5-wave impulse too, a 1, 2, 3, 4, 5. But there's many problems with that count within this initial move up. And then also within this move up here, we did make it past the 1.618 Fibonacci extinction there. So if we pull that trend-based Fibonacci extinction, you can see that we did break past the 1.618 within the third wave. And actually that is now acting as a support, a little micro support level. So depending on how this move right now within this smaller descending channel looks, yes, we could make one more high. And if we do make another high in here, then we could say maybe this is going to be a 1, 2, 3, and then we'll get another bigger pullback that should last around the same amount of time or a bit longer than this guy did, which is going to be around, 20 hours, about a day of a pullback before making a potential another new high. And if we were going to see that, I would look to take out the 72K highs. So a bit muddy here. All I would say is what we need to focus on is our local price action here. Since this liquidity grab this morning, we have been trending sideways and down in this small parallel channel. Not that guy. Let me get rid of that guy. Within this small parallel channel here. Let's go to the 15-minute chart. You can see we're kind of rejecting the top of the channel as I'm making this video. And if we do get a 3-wave corrective move down, so we got our initial push up, our lower high golden pocket, our initial push down, our lower high golden pocket, and then if we come down in one more corrective wave to backtest that channel, and we see this nice 3-wave corrective move to backtest here, then yes, we could get a new high, a new local high above today's highs. So I'm going to be watching this channel pretty closely here. And also, one of the things you want to watch in these channels as they form, you want to watch the volume. If the volume is continually decreasing as we're dropping in this corrective channel here, then that is a sign that this entire descending channel on the smaller time frames is a corrective structure, and it is likely to break up to take out those channel highs. So the backtest of our bigger descending channel that we've been in for about a month is going to be around $67,900, let's say $67,900, around $67,900 to $68K. And that is going to be a key area where I will be watching for a potential bounce. If we turn on our new levels that were created over the weekend, let me go ahead and turn off this volume real quick. And we look at the new levels that were created. We do have a new daily level that did confirm today. So daily level we're going to have at 65,771. And we did break through a naked daily point of control earlier today. So this one at 68,915, that was naked until today. It's no longer naked, but you can see it's still kind of acting as support. So I'm going to go ahead and delete it now because it's been ran through today. It's been hit. It's no longer naked. But we did just confirm about an hour ago a new naked daily point of control, pretty much where we rejected that lower high golden pocket at around $69,413. And then if we turn our range back on for this range, this corrective range, you can see that our value area low of the range is going to be right around that daily level. And so this could be a potential area to see a bounce if we're just going to continue to chop sideways within our horizontal range. We might expect some sort of bounce from here. But guys, if we do drop this far, if we fall back inside of our channel and find reacceptance, I would expect at least some sort of bounce from here, but I expect it to make a lower high before continuing the drop to the downside. And so for me, I probably would look for a scalp here, but nothing more than a scalp at that value area low and that daily level. And overall, I would be looking to come take out some levels below us, probably to take out the liquidity that is resting at 62.5 and then that higher low liquidity at 63K. Other than that, there's really not too much to cover on Bitcoin. We are still in the range. We are rejecting from the value area high of the range after grabbing liquidity. And for me, once again, the most important thing is going to be the back test of this descending channel at $67,900. If we look at our order flow here, on the order flow charts, we saw a couple interesting things over the weekend. So that push up that we saw on Friday night to Saturday morning, Friday night throughout Saturday, was a pretty aggressive short squeeze because you can see as we were pushing up, yes, the CVD was increasing, meaning market buys were coming in. But if you look at the open interest, it was a pretty decent drop in open interest as we were pushing up. So it was nothing more than a short squeeze. And it was a short squeeze because based off of what was happening geopolitically, when that news started hitting and we got that big drop, you can see that we had actually in this entire area here, we had a lot of shorts coming in, and they were for the most part new short positions. So after this corrective move had already started, the news volatility and political news and fear kicked in, and we had a lot of people shorting that news, expecting a bigger breakdown. And when we did bounce and make a higher low, as soon as we started to fill some of these late shorts that started coming in, you can see actually really, really aggressively, we started to get late shorts, a very aggressive amount of late shorts right at that last kind of drop of the fear that we saw during that geopolitical news. So as soon as we started breaking up, holding and breaking up, that's what started to trigger this short squeeze, where we got a massive short squeeze, pretty much pushing up to take out your lower highs at the top of the channel, those $69,000 highs, $68,900 highs at the top of the channel. Now, after that, we saw another corrective kind of channel here to the downside, and we saw, once again, fresh shorts coming in on this corrective channel. You could see short positions coming in. Open interest was relatively flat, but you can see we had a pretty, at least a slight increase in open interest there. So we saw some shorts coming in. And what was the big thing that we saw is after those shorts started coming in, yes, we did see some long stepping in. But this area right here is where I would like to point out to you guys. Look at the amount of aggressive short positions that were coming in inside pretty much as we were ending the weekend here. Bunch of short positions stepping in, so we got that big push up here. Started with a bit of a short squeeze, but we did see a lot of fresh longs coming in this morning during New York Open. Very aggressive increase in open interest, and you can see a very aggressive increase in our CVD as well. So this push up today that we saw, this pump that we saw today, was a relatively healthy pump to the upside. And because we saw a healthy pump to the upside, followed by what we're seeing right now in a bit of a corrective channel here, I do think it is possible that we continue to break up to take out today's highs and potentially even the $71,000 and $72,000 highs. All we can do as traders is be aware of our levels. So, of course, we're chopping around the POC right now. If we can hold this, then I expect new highs almost immediately. But if we're going to make that bigger three-wave corrective move to backtest the channel and hold that $68,000 to $67,900 channel, that is when I would be expecting new highs to come in. So I'll try to keep you guys updated in the Telegram as this is happening. We can actually set an alert down here. This is also going to be near our VWAP close. We'll add an alert down here, and as we're coming down to that level, we'll see if we're getting some local bullish CV or bullish divergences on the chart. So if we continue to grind down, if we're seeing bull divs on low time frames, we'd have to look on like the 15-minute and under. I might look to take some profit, 50% out of the short, and look for potential new highs coming in. But honestly, that's about it for Bitcoin. So guys, we are seeing our first sign of strength, first real big sign of strength by breaking out of the highs from Saturday. Saturday. And breaking out of the descending channel that we've kind of been finding resistance at. If we fall back inside of it, things are going to start looking a lot more bearish for me. Okay, that is it for Bitcoin. Real quick, I want to talk about the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade in the futures markets. They are paying out in real Bitcoin, and they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit just $100, you can get a 50% deposit bonus, $50 bonus on $100. They're offering a 20% bonus up to $1,000 deposit, and up to a $20,000 deposit, they're offering a 10% deposit bonus. So if you're interested, really, really great incentives for you guys to hop on the platform and try it out. I've also partnered with BYDFI to create that Telegram community where I do try to keep you guys updated on what I'm thinking on the price of Bitcoin and on some of the altcoins. If I see a good altcoin trading opportunity, I'll let you guys know about it. You can also ask me questions in that Telegram. In the general chat, you can tag me, ask me questions. If you're interested in signing up for the Telegram, it is a private community, but it is free for you guys to join. All you got to do is sign up with BYDFI using my affiliate link and then deposit $100 onto the exchange. That $100 is your money, guys. You're just depositing on the exchange in hopes that you will try it out and like the exchange and stick with the exchange with the good trading fees that we'll give you, with the good bonuses, initial deposit bonuses. It's really just an incentive for you guys to try. So once you've done that, once you've signed up using my link in the description and deposit the $100, there is a Telegram link in the description of this video. Click that Telegram link, and once you're in the Telegram, type in /verify and then your BYDFI user ID, which is going to be right up next to your little figure guy. And that'll get you into the Telegram. So /verify your user ID, and then you'll automatically be in. And once you're in, you are in. Okay. Second partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator you see here at the bottom of your screen. I use it for all my confirmations on my trades. Like as we were coming up today to take out the highs into the value area high of the range and pretty much to our 1-to-1 Fibonacci extinction target, we're looking for bearish confirmations on the chart. So NAMI showing bear divs printing. It's also showing the money flow bear divs, which does give me a greater confidence in entering the trade upon the confirmed swing failure pattern. I didn't enter then because I was waiting locally to see if we were actually going to touch the 1-to-1. But after seeing that initial drop, now I was looking, because I had my confirmations, I was looking for the short. And that is when I waited for the bounce to the local golden pocket. And I entered the short at the local golden pocket around 69,500. And so NAMI is really, really helpful to keep you out of bad trades without proper confirmation and to get you into the trades that are more probable to play out. I have partnered with NAMI to get you guys 50% off. If you're interested in purchasing NAMI, use the affiliate link in the description below. And in their promotion discount box, use Divine50 as your discount code. You can get that 50% off NAMI for life. Second non-KYC partner of the channel, a non-KYC exchange, is going to be Blowfin. And Blowfin is a new partner of the channel. They're offering some really great initial deposit bonuses. They're offering, if you register and deposit just $5, you can receive a $10 voucher. This is for the first 300 users only. They're offering VIP1 for 30 days. And they're really offering some great initial deposit bonuses as well. So you can get a 20% deposit bonus on $100, or, you know, moving up to about $10,000. If you deposit $10,000, you can get a 10% deposit bonus of $1,000. If you're interested, the link's in the description below for Blowfin. And then I also have two non-KYC partners, MEXC and Bybit. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering a 10% initial deposit bonus up to $1,000. Okay, guys, let's move on to some of the altcoins. Let's move on to Ethereum here. So Ethereum, pretty much the same things going on with Ethereum right now. Ethereum did move up to the value area high of the range, but took out the highs from the weekend, those weekend highs that were put in on Saturday. You can see here on Ethereum, after breaking back into the range, we had a small rejection, but we're able to hold the value, the VWAP, excuse me. We broke above the POC, flipped the POC to support. After rejecting, we did see that small rejection from the bottom of the pitchfork band. We bounced from the POC, and we did front run the value area high of the range. Now, we did front run that value area high on the Saturday pump, but this move down, three-wave corrective move to the value area low. And also, if we pull our golden pocket, you can see golden pocket value area low, our perfect local support level. We did bounce, now confirming reestablishment back within our range, back within our sideways range. And after bouncing from the value area low in our golden pocket, we were able to make that pump up to finally hit the value area high that we had front run on the weekend, and took out some local internal liquidity as well. You can see this local internal liquidity trail. Actually, let me just do this. Kind of this trail of liquidity that was created. We took out all that liquidity, but we were not able to even close an hourly candle outside of the value area high, just wicked above it to grab the liquidity. We have now confirmed that we are staying back inside of our volume profile. And what I want to see now is if we are going to see a drop very similar to Bitcoin, this is starting to look corrective here, this drop. I want to hold the bottom of the pitchfork band. Now that we're kind of back inside the band, you can see we, hold the band once you're inside of it. Once you lose it, it acts as resistance, once you lose it. So if we can see a three-wave corrective move down to that band area, which is going to be coming in around, let's say 1985, I would want to see us hold that. And if we do, I do think we could come up and take out our double top that's at 2150. If you look here, our range highs at 2150, we have pretty much a double top up there. So that is liquidity that is in some ways begging to be taken with that double top. It does look a bit more bearish on Ethereum for me. And one of the reasons why is if we look at this move down from that double top from that Wednesday, February 25th, we could look at this as a potential 1, 2, 3, 4, 5 impulse to the downside. Now, I have to say, the way this starts out, if you're counting this as a 1, this by far looks three-wave corrective in here. We also could say this is a WXY correction downside. So three-wave correction, you get your three-wave correction in an X, and then you get your larger Y-wave three-wave correction in here. So complex WXY correction. And then the last push-up that we're seeing from that Friday, late Friday, early Saturday, depending on where you're at. I just don't want to see another three-wave corrective move here overall. We are still in the range, though, guys. We're still in the sideways range, and the top of the pitchfork band has still been acting as pretty significant resistance up here. So until we can start to break above that and close, I would say 4-hour candles above that, then I am still expecting that this is that sideways range choppiness. Yes, we could potentially come up to take out the double tops, see a fake out of that channel. But until we can start really breaking above the channel and not seeing that liquidity grab, I am still expecting Ethereum to break down from this sideways range overall, to break down and to come down to our new macro lows around $1,600 to like $1,570-ish, where we do have our 4-year long range point of control. Yes, for this range is pretty complex in here. If you're trying to count Elliott waves in here, it's pretty complex. But once again, guys, we're looking for that overall kind of zigzag correction. And within the kind of the wheat and chaff that inside of here, you can try to count the waves within here. You can try to count the waves within here, but you just really want to be looking at the volume. If you're seeing a lot of choppy overlap within a drop to the downside with decreasing volume, then it's going to look corrective. Right now, we are seeing a lot of choppy overlap in here with this push to the upside from the lows of last Tuesday, February 24th. So for me, I would have to say it's not looking too impulsive yet. And I do think that even if we come up and take out the range highs, we could come up a little bit higher to take out those range highs. I'm still looking for that overall kind of three-wave corrective move, that bigger kind of sideways and up zigzag before dropping down. Let's look at our local range. We can look at our important levels within that range, levels of interest. So we do have, of course, those daily levels that are going to be coming into our big support level. We also have a weekly level down there at that between 1600 and 1570. Nice support down there, as well as your 4-year long point of control in the bottom of your pitchfork. But within our local range, except for the daily that just confirmed today, so we do have a new daily that just confirmed today. I'll put that on the chart really quickly here. That is going to be at 1940-ish, let's say. New daily level at 1940-ish. But other than that, there's no daily levels within this area. And then if we look at our naked daily points of controls, let's zoom into the 1-hour chart, because we did bust through a couple naked dailies today. You can see we busted straight through the naked daily point of control at 1982, so we can get rid of that. And we came up and pretty much rejected from our naked daily point of control at 2064. That's where the highs were today, which was also where your value area high of your range was. Yeah, and so no real good important naked dailies above us until we get up significantly higher. And then if we look at our naked weekly points of controls, we do have a naked weekly around 1858 near the lows of the range. So zooming back and looking at our volume profile to match up those important levels. Unlike Bitcoin, where the daily level is near the value area low of the range, you can see our new daily level on Ethereum is near the point of control of the range, which is significantly lower within the range on Ethereum. So could we see this hold? Yes, what we expect on volume profile trading is if we do actually reject this value area high here, you expect the move at least back down to backtest the POC. If the POC holds, then yes, you could make another attempt to break out of that. So I will be watching, like I said earlier in the video, first and foremost, the backtest of about 1985, where the bottom of our pitchfork band is. But if we lose that, then I would be expecting that drop to between your range point of control and your daily level around 1940 to 1950, let's say. If we take our trend-based Fibonacci extinction and we look at the move up that we saw over the weekend, we do have our targets for that one-to-one, that zigzag correction between the 1-to-1 and the 1.236 coming in right around the liquidity of the highs of the range. And so I would like to come up, if we're going to continue to break out, if we can actually start to close hourly or 4 hourly candles above the value area high, I would expect to come up to take out that liquidity at 2150. But that's about it for Ethereum, guys. Overall, this range looks corrective to me, corrective and sideways, and I am still expecting to break down to make new lows. It's just within the range. Remember, as traders, we don't have to know what the price action is going to do. We mark out our levels of key confluence, and if we have confirmation to take the trades as we're coming up to those key levels, we take the trades. On Ethereum, we did have the bearish divergences, and our money flow still looks pretty bearish here. Printing bearish divergences, money flow bearish divergences here on the chart as we're coming up to the value area high, as we're taking out those weekend highs. And we have not been able to fully break out of the range. So could we expect the rollover from here? Yes, I do think we could. It's all going to depend on how this move down that we're seeing right now looks. And of course, if we do start to lose the POC, we do have some liquidity from the weekend lows, from the Sunday lows that are right around the value area low. But at that point, I would really not be looking for internal liquidity grabs. I would be looking to probably break down quite a bit more here. All right, and then let's see. Yeah, this is our channel on Ethereum. Get rid of this real quick. So you can see it's not as well as respected on Bitcoin. Taking it from that first higher lows to your first major low here. You are above the channel, but kind of this chop that we've been seeing here over the past week has kind of invalidated this channel to me. It's not nearly as respected as Bitcoin. So I would just not pay so much attention to that. Zooming out onto the higher time frames, the daily time frame, we still do have nice potential bullish divergences that are developing as far as our larger macro price action goes. So yes, we could come up, take out the range highs into the top of the pitchfork band, but making another new low would be really, really nice to see. You can see here we have some nice trigger waves on the chart, trigger waves on Market Cipher and on NAMI. Money flow is rising to the upside on NAMI here, about to cross into the green. But on Market Cipher B, it still looks pretty bearish. And to grab the liquidity from the range highs around your pitchfork band would be that perfect rejection to come down. And if we got that quick rejection, we could finally see those bull divs come in on the daily time frame, and hopefully by then your money flow is starting to curve up here. So the next major lows that we see on both Bitcoin and Ethereum could be swing long positions. All right, real quickly here, moving on to Solana. Solana is pretty much just grinding within its range as well. Sideways range. We know that we were expecting kind of these ranges to last 1 to 4 weeks. And by the way, we are getting close to, let me just jump to Bitcoin real quick here, and we can look at how long this range has been going on now. We are getting close to that 4-week mark. We're at 25 days here. So we only have a few more days until we start to invalidate the bigger, not a hard invalidation, but the probabilities will severely drop if we start to break that 4 to 1 Fibonacci time. And if you don't understand what I'm talking about, go watch the live streams of last week. I kind of covered that in depth there. Okay, Solana, same kind of thing we're seeing, guys. We're seeing this 3-wave corrective move from the weekend lows from, late Friday, early Saturday, those lows there. And we are still rejecting at the value area high of the range. Our simple range trading, we were able to break back inside the volume profile. Yes, we did push up on Saturday to the value area high, rejected, came back down to your golden pocket area, bounced, and now we're trying to make that push up. Looking at our local areas of support and resistance. All right, in that weekly, let me just double check that weekly to make sure that is fresh. That is not fresh anymore. Yeah, so it looks like we bounced from the weekly earlier today. Kind of got that drop down, bounced from the weekly, chopped between the weekly and the POC for a bit, but we're able to break up with a nice increase in volume and with this nice imbalance candle. What I will say about Solana is Solana's been relatively bullish within this range. When we do get pumps on Bitcoin, the altcoins tend to follow, but Solana gets nice aggressive pumps to the upside. Like on that pump we saw during the week of February 24th through like the 28th, that push up did take out your range highs right into that 1-to-1 Fibonacci extinction target. And Bitcoin, Ethereum have not done that yet. So I would say Solana's looking pretty bullish there. But we've also, since taking out those range highs, I'm now potentially looking for a flat correction. If we're looking for a 3-wave move in here in a W, and then we get this flat that comes all the way up to take out these range highs, and then we could get another bigger 3-wave move down to take out these lows from the Friday, Saturday at $77. And we do have a naked daily point of control resting right into those lows. So to see the liquidity grab of our weekend lows right into that naked daily point of control, I would be looking at that as a potential support level for a potential flat correction. But first, we would want to come up and at least hit the 0.9 Fibonacci of this retracement. So let's throw on that 0.9. So we would want to come up a little bit higher at the very minimum to hit the 0.9, but it would be better to take the liquidity from that last Wednesday to see a liquidity grab and then the drop to take out your weekend lows. Of course, we are, just like Bitcoin and Ethereum, developing some bear divs that were created over the weekend. Bear divs on NAMI, bear divs on Market Cipher B and on NAMI. Money flow, bearish divergences are forming as these range forms. And yeah, pretty aggressive bear divs here. The money flow on Market Cipher B also looks pretty crappy. Zooming out to the 4-hour chart here. 4-hour, no bear divs on NAMI, or excuse me, on Market Cipher B locally, but on NAMI, we do have those confirmed bear divs as well. Okay, so really all that I'm interested in within this range on Solana, I do have to say this still looks overall corrective to me. Could we come up again? Could we even come up all the way up to 102 to 104 before seeing that bigger rejection down to make new lows? Yes, we could. I'm not looking at any significant rises to the upside above those kind of above 102 until we make new lows. So I think this entire range is looking corrective before we break down to make new lows, and then we could see a bigger rise to the upside. But for now, trade the range until it breaks. So we're trading this sideways range. When you're near the value area high, if you have bear dibs, you look for shorts. If you're near the value area low or certain liquidity levels below the value area low, we're looking for longs if we have our confirmations. Simple range trading here, guys. And a lot of people get confused within these ranges, but really, ranges are some of the best price action to trade because we do know our important volume levels, we do know our important liquidity levels, and then you could look for confluence as far as like dailies and weeklies go. Naked weekly points of controls, we do have that naked weekly point of control down here as well at $78. And then let's mark out our new daily that just confirmed an hour ago. New daily level at 83.61. Let's see. We don't really see much confluence with that daily. Yeah, I don't really like the way that daily looks there. So, in other words, I'm not too interested in looking for a trade from that level of support. Maybe a small bounce, but at that point, we would be losing the POC, so maybe a small bounce to backtest the POC before continuing down to value area low. But that's about it for Solana. Let's move on to Sui. Sui came up to the point of control of the range. We did take out that internal liquidity that was from the Saturday highs, but also from your Friday highs that happened. We had some lower highs on Friday, so we took out kind of both those lower highs together, and we are seeing a pretty aggressive drop here on Sui after taking out those lower highs. Let's pull this range all the way. Now, last Saturday, February 28th, which was Valentine's Day. No, sorry, not Valentine's Day. The last day of the month. This last Saturday, the last day of the month, we did get a move back down, a pretty aggressive move back down to our big range point of control. So let me zoom out to the daily and remember that prior range. We're looking at two macro ranges here on Sui. We're looking at that kind of accumulation range that started, and then we have our upper range up here. So we have fallen back. We found reacceptance back within this lower range here on the higher timeframes, this lower macro range. And I marked out the POC here. You can see that POC at 83 cents. We did come back down and touch that range on the weekend low, and we saw a pretty nice bounce from that range. But so far, the move up that we're seeing, and I'll zoom in to show you guys, does still look like a three-wave corrective move up. And we do have, on Sui, unlike some of the other coins, we do have some local bull divs between the lows on Tuesday, February 24th, and the lows that were made on Saturday. You can see we have some bull divs on the chart. You can see also here on NAMI, bull divs on the chart. Money flows coming to the upside here. So there is some more macro bullish signals than a lot of the other altcoins have. But I still don't like this move up that we're seeing so far, guys. That move up from that Saturday low here, it's still right now looking more three-wave corrective, and we are below the POC as well again. So could we see that drop continue and drop down to your value area low, which is going to be right where your golden pocket is? I do think we could see that drop to the value area low. That is now going to be a local minor support level for me because we did front run the value area high as well, guys, today on the pump today. So this area of support, 88 cents to about 87.6, I would potentially look for a scalp long from this opportunity if we're continuing this grindy overlapping structure until we get down to here. And we also have some levels to look at within this range. So was it a weekly level? Okay, and let's mark out our newest daily level here at 88.79. Okay, so now that we have some of our levels turned on here, you can see that we did front run the daily level from a few days ago up near those highs. And if we do bounce from the value area low, if we continue this kind of grindy corrective move down to fill in some of our fair value gap, you can see we have a fair value gap or an imbalance within these candles, these two candles. If we continue this grindy structure down, SUI does tend to get these sharp grindy structures down, So if we get another sharp grindy structure like that down to our value area low, then I would be interested in our daily is close by. We do have a daily level close by. I would be interested in looking for the long to take up to actually hit, grab the liquidity from today's high into your daily and into your value area high. So this would be a local resistance area to be watching. But other than that, I'm just focused on trading this range, guys. I am not worried about, I'm in scalp mode mentality, and I would like to see another low come in below that 79-cent low. It would give us some really nice bull divs on the chart on the daily time frame, multiple drives of bull div on the daily time frame. And then after that is when I would be looking for, let me turn off these levels now to clean up this chart. After that move down, I would be looking for a nice bigger move to back test the pitchfork that broke down. We have a pretty big pitchfork in here that broke down. There is a couple other pitchforks that I am looking at on SUI. And so let me go ahead and show you guys those pitchforks real quick. Let's just clean up this chart for just a second. All right. So this is our second bearish pitchfork. So when you pull a pitchfork, you're pulling it from major pivots. Swing high to swing low to a lower high. But within this area, you can see, wrong one. So our initial pitchfork that I've been studying for most of this entire move down has been this pitchfork. And this pitchfork is the most important to me because it is actually pulled from your high to your low to your actual lower high. This was a liquidity grab of this high. So it is the most important three pivots on the chart. We broke it down after trying to hold it for a couple months. We rejected the value area low, bearish backtest, and then we broke it down. And we're hovering down below it, starting to form this range down below it. But if we look at our prior pitchfork from that pivot before, you can see that on this pitchfork, it is also very, very nicely respected. Midline respected. We did see some kind of choppy failed auction type price action above it, but dropped to the midline and the value area low on your October 10th dump. Rejected the bearish backtest to the upper band, fell to the lower band, chopped around that lower band for a bit. After the bearish backtest to the value area low, we've lost the pitchfork and we are just chopping. We're really not able to get back inside of it. If we zoom in here, let's just go to the 8-hour chart. You can see we're really not able to get back inside of that pitchfork. So knowing that we do have kind of this pitchfork acting as resistance, I am expecting this range to kind of continue to grind in here and reject until we make new lows, unless we can start closing a daily candle back inside the pitchfork. We did see one fake out of it here, but immediately lost it the next day. And then I want to show you guys one more pitchfork. This is our more macro bullish pitchfork. So zooming out onto the daily time frame, if we turn on that macro bullish pitchfork, pulled from the bear market lows in October of 2023, or not necessarily bear market lows, but the lows in October of 2023 to those highs in March of 2024 to those higher lows that happened in August of 2024. We have very, very nicely worked our way down through the pitchfork. Now, after re-entering it, the upper band was holding as support. We lost it, bearishly backtested, rejected. You can see we formed that nice range here at your midline. So this range here had a lot of confluence. It was also our bearish pitchfork, the bottom of our bearish pitchfork. It was the midline support of our bigger macro bullish pitchfork. We lost it. And once you lose that, after backtesting, we backtested the value area low and then lost it. We have now dropped to your next major pitchfork support level, which is the lower band. And I talk about how you do form ranges in and around these bands. And so we're forming the range in and around this lower band. The big level that we've been looking at on a more macro time frame for SUI to come down to is around that 64 to 57 cent area. And so seeing us drop down to that area would also be the bottom of the pitchfork, and I would be looking for swing longs once we start coming down to this area. But that's about it for SUI, guys. Just trade the range. If you're looking at scalping or day trading of SUI, you really just want to be paying attention to the range. We still are within the pitchfork band. You can see we tried to break above it today. We closed the daily candle back inside of it. So yes, could we see that drop to your value area low golden pocket or even lower? Say we finally broke out of this. We kind of saw this corrective channel that was happening, or this corrective trend. We broke out of it, back tested it, pushed up, but not a strong move to the upside, I would say. Say is pretty much at all-time lows, at least on the Coinbase chart. If we go to the daily time frame, at pretty much at all-time lows here on Say. So is it a good time to start thinking about dollar cost averaging on Say? I would say yes, with a caveat. I want to see a high time frame break in market structure before I start to dollar cost average on Say. But we are getting near some pretty extreme lows here on Say. Let's actually just go to Say USDT, the Binance chart. And we're pretty much near, except for the listing day, we're pretty much at all-time lows here and near the crash lows that happened on October 10th. So it's never good to be at all-time lows, especially when like Bitcoin and other coins are so far away from those all-time lows. But I would say that Say is starting to look pretty good. Our money flow on the daily time frame is still pretty bearish here. We do have, unlike a lot of the other altcoins, we do have some bull divs on Say. With the low that was made on Saturday, we took out our crash lows from a few Thursdays ago, confirming bull divs on the chart on Market Cipher B. NAMI did not confirm those bull divs, but our money flow is still bearish. And remember, with bearish money flow will always overpower a single drive of bull div. But I am starting to get pretty interested in some longs on SUI. Now that we have taken out the range lows and even the lows that were made last Tuesday, we are back inside of our local range. And our local range is all this price action that's going to be below our channel, or on the other chart, pretty much below your pitchfork. So if we pull that fixed range volume profile and we look at this, you can see we are confirming reacceptance back within the range. So we dropped down, made new lows. We're able to get back in the range, come up to the POC. We did reject the POC, but then we were able to hold the value area low on a bullish backtest. Hold the value area low on a bullish backtest second time, and now we're just chopping between the value area low and the POC. I would like to see us come up and take out those highs from last Wednesday, like a lot of the coins have highs on last Wednesday. As far as the important levels, well, let me get back to my Coinbase chart here. Important levels on Say within our local range. If we look at, let's see, weeklies. you can see where we have some confluence here. So around the value area high of the range, around the point of control of the range, we also have that naked daily, naked weekly, and naked monthly point of control. And we do have that liquidity from those Wednesday highs resting into it. So I would say that would kind of be my first major level to look for a potential short. If we continue this grindy, overlappy structure until we take out that liquidity, reject, and then lose it, I would look for the short upon losing it after the rejection. That would be the first short. And then I would be honestly looking to at least come down to hit that naked weekly PLC, which I'll have to double check to make sure that's still fresh there. Let's do that real quick. Yes, it is still fresh. So first big resistance area for me on SUI, around 73 to 74 cents. And then if we get above that, you can see we have this the value area high of the range in confluence with another bearish backtest of our pitchfork and a daily level in there. So I would say even coming up to the daily level, this is kind of your better zone between 77 and 76.3 cents. Those are the two levels I'd be interested if we're seeing bearish divergences as we're coming up to these areas for potential shorts. If we can break back inside of the bigger pitchfork, that is when I will start looking at a major sign of strength on SUI and potential swing long opportunities, because we are at pretty much all-time lows on SUI with bull divs on the daily. So if we can start to break above, not see liquidity grabs and drops, but we can start to break back above, flip it into support, I would be looking at that back test for major swing long positions here on SAY. That's about it for SAY. Let's move on to XRP. XRP, we are still just chopping. Really not a lot to cover. You know, Bitcoin, Ethereum, Solana got some nice pumps today. XRP didn't really get a nice pump. We didn't even take out the weekend highs yet, those Saturday highs that were put in a couple days ago. And we're just simply chopping at the bottom of our bigger descending channel here. We have this kind of, let me zoom out to the daily time frame, of our big sideways range that lasted a whole year. We lost that sideways range. We lost the value area low, and we lost the lows of the range at 161. We even back tested those lows and rejected pretty harshly. So for me, it is bearish that we are below and breaking down from this volume profile that lasted about a year, from this range of balance that lasted about a year on XRP. But if we look at specifically this chop down that we're seeing since the all-time highs, it does look like we are very nicely following this macro channel here, as well as our volume profiles, right? Reject the POC, that's when you see the big drop. So we are near the bottom of the channel, and we're starting this kind of grindy corrective price action near the bottom of the channel. One thing that I will say here, the move up that we saw from that few Thursdays ago, or Friday, February 6th, looks very, very much like a three-wave corrective move. It was a three-wave corrective move to backtest your prior lows, and we did reject on that backtest of the prior lows. So I am actually looking eventually for this thing to continue grinding down until we hit the value area low of our smaller range. And if you zoom in on this range, the value area low is at 107.5. But could we see this grindy kind of structure in here until we hit that, or maybe one quick flash down and a recovery? I am going to be looking for, once we take out the lows on XRP, to look for the swing failure pattern long, and I'd be looking at a potential swing long in there based off of the value area low of this prior consolidation range. Even though it doesn't look like it's lining up right now, if you zoom in, let's zoom into the 4 hour. and you come over here, you can see the value area low of that little consolidation range is at 107.5-ish. Right there. 107-ish. And because we saw that bigger move up from the February 6th lows as a very clear three-wave corrective move, I am eventually looking to take out those lows. This price action here looks corrective as well. And because of that, we could be seeing this range simply extend for a bit before taking out the lows. We do have within this sideways range, we can pull our volume profile. I just was showing you guys that, our volume profile of that range. Value area high is going to be coming in. We do have a golden pocket up there and a naked daily point of control up there. And then if we look at even adjusting this range to the lows, yeah, and you have that liquidity grab into that resistance as well. This changes the range a little bit, and I do like the way this range is being respected as well, because you can see we're rejecting from the POC, but we're holding the value area low for the most part. Let's look at our important levels within the range. Yeah, pretty much nothing but naked dailies within here, guys. So our weekend highs that we put in on Saturday, we do have the SFP into a naked daily point of control. And that is a scalp area, very internal scalp, guys. Be aware, because if the markets start to get aggressive, this can get wicked. This can get busted through so fast that it could maybe not even react. But knowing that we have those weekend highs from 2 days ago, Saturday, into a naked daily point of control above us, I would be looking for a potential scalp short from that. And then we have another naked daily point of control around your value area high of the range. And so looking at that naked daily point of control value area high, let me just pull this to there. I would, yeah, that one's a tough one at 147-ish, because I do like this support or resistance zone better above us. And then as far as our support levels below us, you can see we also have those Monday lows from today. Below those lows from today, we do have a naked daily point of control right on the value area low of this bigger range. And if we pull our golden pocket is also down there. That was front run on today's low, just barely front run on today's low. So I would say the support level would be the SFP of today's low into your golden pocket value area low naked daily point of control, 133 to 132.5. And that's about it for XRP. Other than that, I'm not looking for anything. If we do start to lose 107, I think we're going to see a significant breakdown on XRP, potentially breaking down even below back into the 60 cent region. Okay, Chainlink, last one, Chainlink here. Chainlink is chopping sideways. We did front run the 786 Fibonacci. So I was looking at this drop down that we saw. We did bounce from the value area low of the range, which was also, let me see if this is a fresh naked daily. Yeah, that's still fresh there. Okay, so yep, Chainlink still ranging sideways within this sideways range. Looking corrective to me as well, knowing that we have our large accumulation range point of control just below us at 103.6. I am eventually looking for this to break down, to come down, to take out that liquidity into that point of control. And you can see I have my alert set here. We're also back testing the value area low. Let me turn off our naked dailies here. excuse me, not the value area, the bottom of the pitchfork. You can see we had lost this bearish pitchfork. It was acting as support, resistance, resistance, resistance in here, resistance, resistance, resistance. We keep rejecting on the, trying to re-enter back within the pitchfork. So for me, that tells me that this is likely to roll over and come take out those lows. Roll over, come take out these lows here. Could we make it a little bit higher to actually hit the 786 or to come take the liquidity? You can see we have that internal liquidity resting into your 786 at 929. And then if we pull that fixed range volume profile again, and let me just include this little bit of price action. Yeah, you're at the value area high. Coming up a little bit higher to hit the 786 would have been nice. And then if we look at our naked dailies, that's pretty much all that we have left in here. Let's get rid of this one. There's not a whole lot I'm interested in here on Chainlink. One of the trades I'd be potentially interested in is SFPing the range highs at 958 into your golden pocket at into your naked daily point of control at 964. So if we see the pierce above hitting into that naked daily and then we lose that high, I would look for the short there. Short, stop wherever that wick ends up wicking past that, and then I would be looking at targeting, well, my overall trade would be looking at coming down to that $7 POC, but internally I would take some profits at your naked daily point of control and value area low at 831, 831.5, or even coming down to take out the lows of Tuesday, February 24th into your naked daily point of control. So remember, I talk about in these sideways ranges, the two most important things are liquidity and volume. And knowing that we have liquidity into naked daily points of controls, both at the highs of the range and at the lows of the range, except for the wick down here, is important to me. So that's pretty much all I'd be interested in trading on Chainlink is an SFP of 805 or an SFP of 958. 959. Internally, the 786. I mean, I don't like it too much, to be honest with you. If we did get it, I would potentially take it. I guess we could set an alert here as well. I'll try to keep you guys updated on all of this in the Telegram. If I do end up taking a trade on one of the altcoins, I'll let you guys know in the Telegram. We are seeing the bear divs as well from the weekend. Bear divs here on the 4 hour. On the 2 hour, we do have bear divs on Market Cipher B and on NAMI. And we also have the bearish money flow divergences here. Knowing that we saw another rejection from the pitchfork here, and we are back inside our volume profile, I am expecting us to potentially roll down to the value area low again. We would have to lose the POC first, but we need to watch this corrective move that has been happening here. I do have to say this move looks corrective so far, like we could get another high. But if we start to lose the POC, then I would expect to roll down to the value area low. Okay, that's it for today, guys. Please hit the like button if you got anything out of this video. I know these ranges can be a bit annoying to trade for you guys. Maybe if you don't see clear moves or there's been a lot of choppiness, and a lot of people say there's been manipulation within these ranges, but we don't have to know what the prices are going to do, guys. We can just look as far as the important levels of confluence and do we have confirmation to take a trade once it gets there. It's as simple as that. Levels of confluence, confirmations for the trade, yes or no, important liquidity, important volume levels. And other than that, you have to be patient and wait for the bigger macro moves to play out. But please hit the like button on your way out. I will be live tomorrow at 2 p.m. Eastern Standard Time. Please come join me. We'll cover Bitcoin. We'll cover some of the altcoins and try to get into some live trades. So have a good one, everyone. Much love to you, and I will see you tomorrow.